Welcome to the deep dive, where we really try to take a whole stack of information and pull out the most important stuff for you. Today, we're plunging into the world of a company that, well, maybe isn't a household name for everyone, but it's absolutely central to the tech that powers our lives, ASML Holding NV. We've gathered quite a collection of sources for this deep dive, everything from detailed financial reports, stock analyses, to recent news headlines, expert opinions, the works. Our mission today: cut through all those numbers, all the noise, and help you really get a handle on what ASML is, why it's so incredibly important, and what factors are truly shaping its journey right now.
Yeah, it's compelling to dig into ASML because, like you said, it's not just another tech company. It operates at this really foundational level of chip manufacturing. I mean, it touches everything from your smartphone, probably the one you're listening on, to the most cutting-edge AI. So we'll be exploring its unique market position, definitely its financial health, and also these complex global dynamics that influence its operations. We want to get to the core of why this company matters so much.
Okay, so let's really unpack this then. What exactly does ASML do, and why should you, the learner, actually care about a company you might not have even heard of before today?
Well, at its heart, ASML develops, produces, markets, sells. They also upgrade and service these advanced semiconductor equipment systems. Think of them as the almost invisible architects behind every single chip in your life. They're building these hyper-sophisticated machines that literally print the DNA of our digital world onto silicon. This includes critical systems like lithography, that's basically the high-tech printer etching incredibly tiny circuit designs onto silicon wafers, and also metrology, which precisely measures if those designs are perfect down to the nanometer. And then there's inspection systems checking for any microscopic flaws. Seriously, without ASML, the most advanced tech we rely on, it just wouldn't exist.
That's quite a picture. And here's where it gets, well, really interesting, I think. Many sources describe ASML as having a near monopoly in one specific area: extreme ultraviolet, or EUV lithography.
Hmm.
What does that actually mean for the industry? I mean, is near monopoly even strong enough language here?
You know, it's almost an understatement. ASML's EUV near monopoly means they aren't just suppliers. They are effectively the gatekeepers to the future of advanced computing. This isn't just about leverage in a business sense. It implies a pretty profound geopolitical vulnerability for any nation that doesn't have access. It really turns ASML into this critical piece on the global power chessboard, almost like a utility, maybe more than a traditional company. They are the sole provider, the only one making these indispensable machines for global chip makers who need to manufacture the absolute most advanced chips.
Wow, okay. Gatekeepers. And just for context, this company, it's headquartered in Veldhoven in the Netherlands, founded way back April 1st, 1984, and its IPO was March 15th, 1995. So yeah, it's been around quite a while, quietly building up this essential, almost singular role. All right, we've established ASML's indispensable, almost invisible role right at the heart of the chip world, gatekeepers, as you said. But does this crucial position translate into, undeniable financial strength? We see the broader market indices like the DJA, NASDAQ, S&P 500, they've shown positive trends recently. Does ASML's performance truly reflect its unique power, or is it maybe facing different headwinds?
That's the crucial question, isn't it? So as of July 10th, 2025, fairly recent data, ASML's last close was $802.09. Market cap around $315.45 billion. That puts it comfortably among the world's 30 most valuable companies. Their sales, trailing 12 months, hit $32.95 billion. Income, $9.33 billion. And what's really compelling here is the profitability metrics. Gross margin, 52%. Profit margin, 28.32%. That indicates really strong operational efficiency, converting revenue into actual profit very effectively.
That is an impressive profit engine, but okay, if the company's so fundamentally sound, so profitable, how do we square that with its stock performance? I mean, the long-term growth is amazing, 659% over 10 years, 115% over 5 years. But then over the past year, a decline of what, over 25%? Is that just market jitters, or does it hint at maybe some underlying issues that those big profit numbers don't immediately show?
That's a really sharp observation because, yes, while ASML has that clear history of robust growth, it's definitely not immune to short-term swings. And that recent decline tells us there are other forces at play. Its beta coefficient, which basically measures how much a stock tends to move compared to the overall market, it's quite high, reported between 1.78 and 1.95 in different sources. What that really means for you, the learner, if you're thinking about investment, is if the market moves 1%, ASML stock often swings maybe 1.8%, 1.9% in the same direction. It amplifies things.
So higher risk, potentially higher reward.
Exactly. It makes it more volatile. And something else to watch. Their next earnings report is coming up soon, scheduled for July 16th, 2025. That could be telling. Although looking at their last reported quarter, their earnings per share, 6.0, actually beat the estimate of 5.74. That was about a 4.5% surprise. So that shows a positive trend, at least recently, in meeting or beating expectations, which investors usually like, despite those broader market swings.
You know, ASML's name seems to be everywhere when you read about the AI chip arms race. My news feed is just constantly filled with it. Is this just smart marketing kind of buzz, or is there a fundamental, almost inescapable connection here that we really need to grasp?
Oh, it's absolutely fundamental, not just buzz at all. Think about it. Advanced AI models, they require increasingly powerful, increasingly efficient chips, chips that are really pushing the boundaries of what's technologically possible. And these chips, well, they demand the most sophisticated manufacturing processes available, which heavily rely on ASML's lithography systems, especially that EUV technology we talked about. So its AI edge isn't just real, it's the bedrock, the foundation upon which this whole AI revolution is actually being built.
Okay, Bedrock. So the AI connection is rock solid. But then we saw these analyst calls suggesting ASML is a buying opportunity in the AI-driven chip boom. Some even say it's among stocks that will make you rich in 3 years. Sounds great. Yet at the same time, we also hear these cautionary notes like 2026 risks or a price target cut. If it's so fundamental to AI, why this really stark difference in market sentiment? What's going on?
Yeah, and this really highlights that critical difference, doesn't it,
Yeah.
between a company's underlying technological importance, its indispensability, and the dynamic, sometimes, frankly, volatile nature of market sentiment. While ASML's tech is undeniably critical for AI, the stock's performance, the analyst outlooks, they can be swayed by broader market conditions, sure, but also competitor dynamics or specific worries. Analysts might mention foundry logic risks or UV concerns. That doesn't necessarily mean the tech isn't needed. It could be concerns about potential order slowdowns from major customers, maybe, or just a general market downturn affecting even the strongest players. It's complex.
Right, it's never just one thing. Okay, so we've peeled back the layers on the tech dominance, the financial might. But the ASML story, it takes an even more complex, sometimes dramatic turn when we factor in global politics. How do these geopolitical currents, these shifting sands, influence a company that's so utterly central to technological progress?
This is truly a crucial piece of the puzzle. ASML, being a Dutch company, operates in this highly sensitive geopolitical landscape.
Yeah.
And the sources show clear, direct impacts. For instance, there's that recent case. A Dutch court sentenced a former ASML employee 3 years in prison for sharing sensitive tech with a Russian contact. That violated EU sanctions, involved computer intrusion. This isn't just some internal corporate legal issue, right?
Yeah.
It highlights how even these highly specialized private companies become direct battlegrounds for national security, for intellectual property protection on a global stage. It makes their internal security measures almost as vital as their R&D budget.
Wow. Yeah, a direct battleground. And it's not just internal issues, is it? We also see headlines about China export curbs, Trump's chip tariff threat, these big external pressures. Yet, despite these headwinds, and despite some recent analyst downgrades like Jefferies moving from buy to hold, Barclays from overweight to equal weight, the consensus target price for ASML stock is still pretty high, $859.54, but with a really wide range of analyst estimates, from 500 euros all the way up to 970. Why such a mixed bag from the experts?
It's fascinating, isn't it? Watching how analysts try to weigh all these competing forces.
Yeah.
The core technology, still strong, still indispensable. No one really disputes that. But these external geopolitical factors, plus potential shifts in demand from their major customers, they inject significant uncertainty, real uncertainty. So analysts are constantly adjusting their ratings. They're trying to balance that fundamental strength against the very real, often unpredictable, impact of international relations and trade policies. That disparity you pointed out, it just reflects the sheer complexity of predicting market moves for a company sitting right at the crossroads of tech, finance, and global politics.
Makes sense. Okay, let's pull back the curtain a bit on ASML's internal operations then. It's a huge employer, right? Around 44,000 employees, and then that number has seen pretty impressive growth. What else can we glean about how this massive, highly specialized organization actually functions day to day?
Yeah, 44,000 employees. It's like a small city, but filled with incredibly specialized minds, and the metrics here are quite telling. Revenue per employee is around 641,000. Net income per employee, about 172,000. Those numbers give you a sense of the incredible productivity of that workforce. But it's not just about the numbers. The insight here, I think, is the immense challenge and the strategic importance of scaling such a highly specialized group. Given ASML's unique technology, attracting talent, training them, keeping them, especially top engineering talent.
Hmm.
It's absolutely paramount. This isn't just about hiring people. It's about finding and nurturing the relatively few individuals globally who can truly master these unbelievably complex systems. It really makes their human capital strategy just as critical as their R&D budget.
Yeah, I can see that. Finding those specific skills must be tough. And the company has also been actively engaged in share buyback programs. We saw reports on that. What does that signal to you, maybe thinking as a potential investor? And what do its other financial health indicators tell us about its stability?
Right, the share buybacks. ASML reports them regularly. Typically, that signals the company's strong confidence in its own valuation. They think their stock is a good buy. And it's also a way they commit to returning capital to shareholders, which investors generally like to see. Looking broader at their financial health, their debt-to-equity ratio is very healthy, just 0.21. That tells us they're not overly reliant on borrowed money. That's good for long-term stability. And then you look at liquidity ratios. Their quick ratio is a 0.91, and the current ratio is 1.52. Basically, the current ratio shows if they have enough short-term assets to cover short-term debts, 1.52 is pretty solid there. The quick ratio is even stricter. It takes out inventory, and 0.91 still suggests they can meet their immediate obligations without needing to sell off inventory quickly. Essentially, they have a strong cash position, good financial footing.
Okay, so wrapping this up, what does this all mean when we put it together? We've seen ASML as this, well, undeniable linchpin of advanced chip manufacturing. It boasts impressive financial strength, plays a critical, foundational role in this huge AI era that's unfolding. Yet at the same time, it operates in this incredibly complex geopolitical landscape. Export curves, international incidents, they directly impact the business. It creates this real dynamic tension, doesn't it?
Absolutely. And knowledge is most valuable when it's understood and applied, right?
Yeah.
What truly stands out about ASML is how it perfectly embodies that intersection of deep, deep technological innovation and the often turbulent, unpredictable currents of global economics and politics. It's really not just a company. It's almost a microcosm of our modern digital world where advanced tech and national interests are just inextricably linked. You can't
Yeah.
separate them.
So for you, the learner, hopefully this deep dive offers a useful shortcut to being well informed about a truly pivotal company, one that shapes so much of the world around us, often invisibly. And here's a final, maybe provocative thought for you to consider as we finish up. If the future of global innovation, of technological power, really hinges on access to the most advanced chips, and if ASML is effectively the sole provider of the hyper-specialized equipment needed to make them, how much does this one company's success or its struggles truly dictate the pace of technological progress worldwide? And what does that singular position mean for global power dynamics going forward? Something to think about.